Now that we are done with the P&L statement, now let's look at how do we prepare a cash flow statement. So, cash flow statement, what is it typically containing? It's similar to a P&L statement itself, but it will deal more with the real cash inflow and outflow. And from any financial analyst standpoint, the focus is more on the cash flow statement more than a P&L statement, because this cash flow statement talks about the real presence of money or the real movement of money either coming to the company or going away from the company. So from all financial calculations or valuations perspective, the focus is more on a cash flow statement rather than the other financial statement. But yeah, the knowledge about a P&L and a balance sheet will definitely help me in terms of creating good cash flow statements, but we need to be very good at understanding each and every aspect of the cash flow statement to get a very good hold on the valuation process or a financial profitability evaluation of any particular company, or to even evaluate what is the return that is coming up on our investment. We have to become more and more comfortable with the cash flow statement itself. So what I would be doing with is using the P&L as well as the other statements that we have prepared. There is a standard format with which I generally go with the preparation of the cash flow statement. So what we'll do is we'll create a new sheet, call it as cash flow, and the same logic, because we will be preparing this year over year for each of the years. So the first part I'll keep it the same. If this is equal to blank, I will keep it as blank, otherwise I'll populate it with the value. The same logic across, and I'm dragging it up to AZ. Alright. So this part is the same, right? Now, as a part of the cash flow statement, what I could really look at is, in a typical mechanism to prepare the cash flow, I would look out for the PAT, and to this I add depreciation. That's a typical way we prepare a cash flow statement. So to the PAT of this particular year, I am adding the depreciation of that particular year itself, because we add up the non-cash expenses for the period, because they are not a movement of cash, they are more of allocation. So that's the reason we add non-cash expenses and treat it as a part of the cash flow. And probably I will also treat whatever are the costs that are associated with. So with these two things, probably any changes in the working capital. What is the working capital here? Probably I can take, as per the simple reality, we are breaking our cash flow statement into cash flow from operations, cash flow from investments, and cash flow from financing. So anything to do with the operation, generally we start with PAT plus depreciation and any kind of adjustments that are happening to the working capital. Working capital adjustment is majorly to do with any kind of short-term fundings or all those short-term payments. All those are affecting my working capital. So if I don't have any, on a simplistic note, I can go with PAT plus depreciation as the cash flow from operations. Otherwise, I can think of lease deposit, extra cash that we are doing as a part of the lease deposit I can take it into the cash flow from operations. Otherwise, we can consider the lease deposit as a kind of investment, but I don't want to consider it as an investment activity because this is more of a caution deposit which is not fetching any kind of interest or anything on our investment. So basically I will look at PAT plus depreciation plus whatever is the cash that we are either depositing or withdrawing with respect to the lease deposits are typically going as a part of cash flow from operations. And when I am looking at cash flow from investment activities, I majorly look at, I'll use the word called the deposit to a DSRA account. As I have highlighted earlier, the interest and the principal that I am supposed to pay within the next 6 months, probably I have to maintain an FD for that. This FD may fetch some kind of a return. So that is where I call that kind of an account as a DSRA account, which I am treating it as the cash flow from the investment activity, and anything to do with the loan repayment is what is coming out as the cash flow from financing activity. So these are the regular cash flows that we are encountering with the cash flow from operations, investment as well as the financing activities. So what I can do, either I can break down into that kind of detail, or I can add up all those things and I say the net cash flow. Right? And I can very well go with the net cash flow kind of an approach. Okay, PAT, to that I am adding depreciation. Then I am going ahead with changes in lease deposit. That's one more area that is impacting our cash flow. Then I am also looking at loan repayment, whatever is the cash outflow or inflow. Interest is already computed as a part of my P&L statement, so it has got updated as a part of my PAT. So when I am putting a PAT here, it has taken care of the entire P&L statement, so I don't need to bother too much about that. The depreciation is what is getting added. The changes in the lease deposits, because only lease rental has gone into the P&L statement, no lease deposit has not gone anywhere. So that's the reason we are putting the changes in the lease deposit here. The loan repayment, another element getting into the P&L, into the cash flow statement. And I am also looking at the DSRA account contribution. So these are some of the major elements which are impacting my cash flow statement. So I have to reflect all those things as a part of my cash flow statement here. So let me start looking at the PAT. Okay, again all these are applicable to my operation years only. So if this is equal to O, probably from the P&L statement I will get the PAT and I will put up otherwise a blank. So the P&L is resulting in a PAT of blank here, and I can even take it till the last up to the AZ column. So the PAT is coming from all these locations, and if possible again I can apply some kind of a formatting features on the top of these things. So this is what is the PAT. We will add back the depreciation, but this depreciation is a straight line depreciation only. So all I can do is, if this is equal to O, I will bring up the straight line depreciation that I have taken as a part of the P&L statement. I am adding it back. So the same logic again, when I am adding up the depreciation, this is what is the movement of cash. So I am having some positive cash in each of the periods, or because the depreciation is what is coming out. Then the changes in the lease deposit, again I really don't need to bother about what has happened during the construction period. Only for the operations period, I am looking at whether I have contributed something more or I have contributed lesser or I have withdrawn something. So that's the reason what I will do is, if this is equal to O, what I would be looking at is the difference in the lease expense, right? The total lease deposit, I'll take the difference between this year's deposit versus the previous year's deposit, because lease rental has already gone as a part of my PAT, so I don't need to bring that again. But when I am talking about lease deposit, every year I am contributing some additional amount towards my lease deposit, so I have to handle that part as a part of my additional cash flow. So here, if I see the change in a lease deposit, yes, this has to come out as a cash outflow. So probably I will take it the other way. The A5 minus B5, the previous year's deposit amount minus the current year's deposit amount, so that it comes out as a negative cash flow, means there is a cash outflow from my side in terms of the deposit. And now what you could see is, if we see in the last year, each of the years, this is what is the outflow that is coming up in terms of the lease deposit, right? These are what are the cash flows that are coming out as a part of the lease deposit in each of the years. Now if I look at, these are the lease deposits that are coming out in each of the years, because this is what is the lease deposit amount that is coming out in each of the years. And in the final year, probably I am getting back my lease deposit, right? So the way it has to work out for me is, if that is the final year, even that lease deposit that I have to get back has to be very much considered, because if I am talking about for each of the years, these are the additional lease deposits that are coming out to me. Probably in the final year, I should talk about no lease deposit at all, right? Rather than that, we have handled it at this particular layer. So what we should do is, it's better that I handle it as the total lease expense minus the lease rentals, instead of directly taking the difference of the lease deposits. Probably I should have taken it as the total lease expense. Instead of doing this work, I should look at it as total lease expense, total lease expense even that doesn't work out, right? The difference of this much, whereas here it is increased. Okay, total expense is increased by 0.05. No, okay, here the better thing for me is, I could easily handle, instead of these things, probably for the final year, because this cash flow, I am more looking at one more additional thing. If it is O, I am looking at it as A5 minus B5, which means whatever was the difference corresponding to the previous year as a part of the lease deposit. Only in the last year, right? So here I would put one more rule saying if this year is equal to, if it is the last year, how do I take out as the last year? That is where when the lease amount will come back to me. So I'll take it as summation of the construction period as well as the operations period. If this is equal to the last year, instead of talking about the difference between the two periods, I'll talk about the whole amount being released, the lease deposit itself getting released, otherwise the difference between the two lease deposits getting released. When you do this small exercise, I'm expecting if this is equal to this, otherwise you do this, and finally you put up a blank. Alright, if B1 equal to the summation of these two, do B1 equal to summation of these two, handle this, otherwise you can close the bracket here with a space here and then closing the bracket here. Now what will happen because of this is, as a part of your cash flows, now in the last year you are getting back the entire lease deposit, which means you are turning positive on the cash flows in the final year. That's one more cash flow that we have to handle. And when we are talking about a loan repayment, this is primarily an interest repayment part. So the interest repayment, I can get it from this particular sheet, wherein I can take this particular array again using the index formula. I can pull out the value corresponding to each of the rows. So the same way as we have done for filling up the interest, I'll use the same formula for the principal repayment also. All I could do is, if this is equal to operations, I would get index of this particular array. This is the array I am interested in. In that, the year number plus 1, that is the row number I will get, and one column, because my data is having only one column in that. So my loan repayment, probably it's better that I take the negative of this entire work, right? So I'll instead of just taking index, I'll take the minus of index. So what could happen, because it's a cash outflow from our side, because this is a cash outflow from our side, I would be more interested in, here I am getting a negative value, error wherever applicable. So what I can do is, if error, on the top of this I can very well write, if error of this entire thing, handle it as a blank, right? Just to avoid the error scenario, I am simply saying wherever such kind of calculation error comes, handle it as a blank. Now let's see whether what is coming is as per our requirement or not. Yes, the principal repayment is getting repaid during this 12-year period. So obviously the loan repayment is coming out more like this. Now, the DSRA account. The first thing I need to know is, what is the total loan repayment that is required for each of the years. It could be interest plus principal. What is the repayment amount that is required for each of the years? So I'll maintain a couple of small calculations here, which will help me for my cash flow calculation, wherein I will talk about interest and principal repayment amount. It's not taking into a cash flow, but just for our understanding purpose, I am trying to find out what is the total interest and principal repayment each year. So logically speaking, I am putting up a simple thing saying, if this is if this is if this is equal to O, I am doing the summation of the principal and, or probably the summation of the negative principal and interest. Interest is coming out from my P&L statement. So interest. So these two put together is what is updating what is the amount that I have to pay every year towards the interest as well as principal repayment. So this number is coming out that this is the amount. Okay, the same problem, the value problem is coming out. So on the top of it, if this entire thing is an error, so which means I am using a formula if error of this entire thing. We have to be careful in using if error, because if it is just because of the spaces or such kind of thing, it's better that you can go ahead using the if error. But if it is attributed to any specific case, it's better to write the formula corresponding to that. So now what I will say is the DSRA requirement. I'll use another field called DSRA requirement, simply talking about whatever are the number of months, whatever is the payment that is required in the next period, whatever is the payment that is required in the next period, I will maintain a simple 6 months requirement. So this many months by 12 is the typical requirement I maintain as my DSRA account. So probably I can very well go ahead saying if this particular value is blank, I leave it as blank, otherwise I'll put up my DSRA requirement calculation. So what will happen from this? I know that my DSRA requirement for each of the years, I know what is the amount that has to be created as a part of my DSRA account, right? As a part of the DSRA account, how much has to be credited in each of the periods. So based on this, I will get, right, if at all I'm putting this as a blank, probably it's better that I handle it with a 0 here, whereas put another requirement on the top of it saying if this value equal to blank, leave it as blank. Probably if I am putting one more rule on the top of it, it may solve a slightly different purpose for me. When I am dragging it across, something which I could see is, at least for the last year, it is coming out that the DSRA requirement is 0, whereas for the remaining periods it is being shown as blank. But yes, here the problem is coming out that the DSRA requirement for the first year is not getting handled. So it's better that I go the other way itself, right? If I don't put this, part, okay, this is the DSRA requirement that is working out, but this will result in zeros across. So better I not use that formula. If the next one is blank, leave it as blank, right? If it is blank, leave it as blank, otherwise do the multiplication divided by 12. Okay, so let's go with this aspect itself. In this case, at least the only thing that comes out being This is how the DSRA requirement is coming up. Now, as a part of my DSRA account now, what I can very well look at is I should update the DSRA account. This is where I have to be slightly careful of during my construction period. I have a DSRA requirement of 4.35 crores, right? During my construction period, I have a DSRA requirement of 4.35 crores. There is no way I can generate any revenues out of it. So that is where I still suggest whatever the DSRA requirement during the construction period is, even that has to go as a part of my construction assumptions. So this is one more addition that is coming to the cost of the project now. So I will even bring out the DSRA requirement, which would commence in the last year of the payment period, in the last year of the construction period. So what I would simply do is, if this is equal to the construction period, this is one more addition that I am bringing in now. If this is equal to the construction period, I am saying maintain the 50% of your where is that? Yeah, 6 months of your DSRA requirement of both the interest and the principal repayment. What is the interest and the principal repayment for each of those periods? I have to really find out what is the interest and the principal repayment for both the years. So what I should do for that, instead of simply saying whatever is this particular number, I can compute sum if in this particular period, is equal to the construction period, in this particular period equal to the construction period, add up the interest part, right? Out of this M column, add up the interest part wherever it is matching, or let me just see. What we are typically getting is this 4.35 actually should not be present here. Even if it is present, it should not be involved in the calculation. So I always suggest let it not be present as a part of our calculation at all. If that is the case, right, if it should not be present as a part of the calculation, what I can very well do is this 4.35 also I should put it as a part of my construction requirement only. So to take it as a part of the construction requirement, I need to find out what is that DSRA requirement in the year before. So probably here itself somewhere I will mention the DSRA, or probably will maintain here only DSRA requirement, wherein I will put if this is equal to the last year. How do I know what is the last year? The construction period. If this is equal to the construction period, what I would be doing is, I would add up the interest and the principal repayment for the period next to the construction period, right? What is the interest and the principal repayment corresponding to the next period? That is where I will pull out index from this interest and principal sheet, saying this is the area. In this area, I will take out the construction year plus 1, and at the same time I would also add up the interest as well as the principal, right? So I will also add up the other part, again going into the index for the interest and the principal. Instead of N column, I'll also take the O column, and I'll put the assumptions this plus 1 comma 1. So I'm adding up the index of the first as well as the second, especially if it is the last year. And if it is not the last year, I am leaving it with a 0. Now because of that, what happens in this year, the DSRA requirement is coming out to be something like this, whereas in each of the years, so probably here B1 equal to B4, index of principal O column, assumption B4, interest and principal, sorry, it's not O column, interest and principal $O4 $O4 to $O $51. Now let me try. First year the DSRA requirement is coming out to be something like this, but still it is working out the same. Why is that so? If B1 equal to assumption B4, which is about the construction year, I am doing an index of interest and principal O column. Okay, here also interest and principal O column. Okay, O4 to somewhere the formula is getting wrong. Let me just quickly observe that. If P1 equal to this, index of principal and assumption B4 plus 2, because I want it for the next period. B4 plus 1 is giving for the current period. So I'll go for the next period. So let me now check it. Yes. Now the DSRA requirement, okay, at least the interest and the principal is coming out. So from whatever is coming out, the summation of all these things, whatever we have done, the summation of all these things, I can very well multiply it by the assumption, whatever is the DSRA requirement period. This is the DSRA requirement period divided by 12. Now when I go ahead with this part, it's even working out that for this first year the DSRA requirement is something like this, and probably I can even now bring up one more thing on the top of this, saying if this equal to C only, this is applicable. Otherwise I will replace it with a blank so that I can drag it much better. So what I'll do, I'll drag it across for the DSRA requirement across all the period. That is something that is getting newly introduced now for me. Now even this will get added as a part of my project. So I am summing up this B12 to B13, and along with that I will also sum up the DSRA requirement. Now because of this, the project cost has gone up here, and the same logic when I am turning it here, the DSRA requirement is going up, which is resulting in the cost of the project going up. So finally when I am dragging it across up to here, I am seeing that these are my costs of the project to address the various DSRA requirement and the various other costs also. Now this is becoming to be my total cost of the project, and the whole thing is taken care as a part of the model. So my project is costing me total of 125.5 crores. Now I can adjust this formula straightforward, saying if the above one is blank, instead of putting if the next one is blank, I can simply go with if this above one is blank, leave it as blank, otherwise do it as a multiplication. Now because of that, what happens, this is coming out as an updated formula now, and if I drag it across, what we are seeing when I am dragging it as a formula is, at least for the last year, okay, I think if this is blank, leave it as blank, otherwise take the next period. So here I don't need to consider the DSRA because this has already gone in. So for this period I am taking that these are the DSRAs. So for each of the periods I am computing that this is the DSRA requirement, right? This is the DSRA requirement, whereas in the last period it has to get updated to 0, or probably it has to get updated to 0. So what I can very well do is, if this is blank, leave it as blank, otherwise this is blank, leave it as blank, otherwise if the next one is blank, replace it with a 0, otherwise do the calculation straightforward. Now let's see whether it will work out. Now in this case, all I am doing is the DSRA requirement for me, when I am dragging it across, my DSRA requirement for that year is coming out to be 0. Very well worked out. Now what I can do is, as a part of my DSRA account contribution in my cash flow statement, I can very well work out with these numbers. Numbers saying, okay, for the operations period, all I can now put up is, if this is the operations period, I am talking about the net DSRA position for each of the years. So probably I am looking at summation of the DSRA of this particular year. I am subtracting. So DSRA requirement is these much. So what I can very well do is how much I have to contribute in each of the years, right? I can very well take it as the negative, or probably I'll take it as the summation of the previous year's DSRA requirement minus the current year. So probably I can very well take it as, instead of taking a summation, I can say the previous year's requirement minus the current year's requirement. Otherwise I'll replace it with a O, with a blank. So in this, what is coming out, the DSRA requirement in this year, it's coming out to be value, whereas in all the other years it's coming out to be correct itself. And again here it is coming out to be value. So it's better not to have such kind of a formula which will result in value error for us. Okay, here we can write one more rule saying, yes, if this is equal to operations, fair enough, then only we will actually put up a DSRA requirement. Then if the previous DSRA part is equal to blank, then take the DSRA value as it is with a minus sign. Then take the DSRA value as it is with a minus sign. But if the previous is not blank, then you take the subtraction between the two. If I am putting this particular part, I can take up the subtraction between the two, otherwise I will put up a space. Now in this case, what will happen is the first year is getting updated with minus 7.5. After that it is coming out as positive, fair enough. And when I am taking it till AZ, it is showing hash values here, and these hash values can very well be addressed through if error, because I can't address real problems with if error, whereas if there are cosmetic problems, you can very well address them with an if error kind of a formula. So the DSRA account for all these periods, I am showing it as if error. So all the other numbers will go as blank, whereas up to this particular year I am getting out what is the cash inflow or outflow out of my DSRA account. So based on these things, we are computing our cash flows now. Based on these things, I am computing the net cash flow. So after all these things have been addressed, I am computing my net cash flow, wherein again the same checkup is happening. If this is equal to O, right, if this is equal to O, I am doing the summation of all these numbers, otherwise I am showing it as a blank. Let me see, can we address this? If this is operations, I am doing a summation of all these, otherwise showing it as a blank. So let's see whether this formula is working out across. Yes, this is fine. If they are all blanks also, we are getting that these are the cash flows in each of the years. For the first 2 years or 3 years, we have negative cash flows, right? So we have negative cash flows in the first few years, but still wherever we have a negative cash flow, we have to go ahead with a short term. Wherever we have negative cash flows, we have to go with a short term overdraft. So I have to figure in the overdraft piece also into this. So these are the net cash outflows for me. And now for each of the years, what I can very well think of is an overdraft. Wherever there is a negative cash flow, I'll talk about an overdraft. So what I can very well do is, if this is operations, and I'm saying if the cash flow, net cash flow is less than 0, I will take the negative of the net cash flow as the overdraft. Otherwise, there is no overdraft amount. So I will leave this with a blank, and similarly this also I will leave with a blank. So the overdraft as a part of the cash is coming out with all these aspects built into it. So obviously I'll drag it up to AZ, and what is coming out is, these are all blanks coming up. Only for these periods the overdraft is actually coming out. This is what is the overdraft requirement. And so because I have taken this kind of overdrafts, I may have to pay back these overdrafts also. So we'll even figure that out as a part of our cash flows. So right now, this is what is the overdraft I have taken in each of the periods, and finally made my net cash flows to be 0. But wherever I have a net positive cash flow, right, the net positive cash flow, I have to repay back my overdrafts also, whichever I have taken. So what I can very well do is cumulative overdraft. Right, we'll talk about cumulative overdraft, which is again the summation right from the previous. So what I could do is, if this is equal to the operations period, I will look out for the summation of the overdrafts until this particular period. So I'll take the dollar for the B here. I'll take the summation of the overdrafts until this period, otherwise I'll leave it as blank. Okay, so my cumulative overdraft is coming out to be something like this. Right, these are my cumulative overdrafts amounts. So here all I can talk about is repayment of the overdraft. Right, I can talk about the repayment. So OD repayment. When I am talking about the OD repayment, all I can talk about again is, if this is equal to my operations period and my net cash flow is positive. So if the net cash flow is greater than 0, what I would start looking at, I will look out for the OD repayment part, because 7.45 is the overall OD that I have taken. So whatever the OD I have repaid till date, I will take, see, if at all, for example in this year, if my cash flow is 1.15, whereas the cumulative OD for me is 7.45. So if at all the cumulative OD is lesser than the amount, I would pay the entire amount for the overdraft itself. So that is what I have to consider as a part of my calculation here. So what I am doing is, if that is an operations period and the cash flow is positive, I would consider the net cash flow. So I will be taking So what I can very well look at is, if this is equal to operations what I'll see is if this is positive, if the cash flow is positive in a particular year, all I can look at is I will see what is the outstanding OD. So I'll take the minimum of what is the outstanding OD minus whatever has been paid till date, whatever the repayment that has happened till date. So whatever has the repayment that has happened till date, either that much or what is the total cash flow for this particular year. So the minimum of these two is what I will be taking as the OD repayment. Otherwise, if it is not greater than 0, I don't even bother. I'll replace it with a blank. And even if it is not operations, also I'll not do anything. I'll replace it with a blank. So just when I am dragging it across, yes, that is correct. We are seeing that the OD repayment of the OD is coming out to those kind of numbers. And when I am dragging it across, also my OD repayments, yes, zeros across. So these are the OD repayments from my side. Then the next thing we are trying to consider is probably I could have taken the net cash outflow even after considering. So the total cash outflows now, after even talking about total cash outflow. Now what is coming out as a part of the total cash outflow? If this is the operations period, I am talking about the summation of these two, the OD repayment, the net cash outflow, overdraft, and probably the negative of the OD repayment. I have to take into consideration the negative of the OD repayment. So that might create a problem. So what I could very well do is, in this OD formula itself, probably instead of talking about minimum of these two, I could do the reversal now. Instead of saying minimum of these two, I'll take the maximum of the summation of these two things minus summation of this minus whatever is the OD outstanding, comma the negative of B9. Probably I'm just reversing the transaction to see if that comes out to be negative straightforward. So OD repayment wise, now when I am dragging, yes, but 1.15 minus 2.78 is fine, but for the third year, this is creating a problem, because what is coming out here, A11 to G11, okay, 1.15. So it's better that I even do the negation of A11 to G11 minus 1.15 minus H17. So this is what, and comparison with minus H9. So minus 2.78 versus minus this much. Okay, so when I am going to the next, what is happening? Minus whatever 3.83 minus 3.83 minus so the negative of this. So probably we have to be slightly careful in this formula. So this is coming out to minus 4 point something minus I9 minus I17, which is 7.45. So this is working out to minus 11 point something. So okay, let me revert back now. These are the positive things, right? I'll not go back. I'll go back to this original. So probably the simpler thing for me to address out is I'll put another element, the OD payment, wherein for simple purpose, if I say if this is blank, just for addressing that negative, or I could think of some other formula, but if this is equal to blank, I'll leave this as blank, otherwise I'll simply take the negative of this value, nothing more than that. Just to create one more addition kind of a field, I am doing that exercise, right, so that the negative can be addressed as a part of another cell value. Now as a part of my total cash flow, I can handle this as, if this is equal to operations, I will consider the summation of the net cash flow, the overdraft as well as the OD payment. Otherwise I will take it as a blank. Now hopefully everything is fine. Yes, all these years it is coming out to be negative, fair enough, and in this years it's coming out to be positive, fine. And probably when I am going towards the AZ, I want towards the last also that all these things are addressed properly. Yes, all this is addressed fine, releasing that this is the total cash outflow, or probably I, instead of calling it as cash outflow, I'll even call it as cash surplus. So this is the cash surplus that is generated in each of those years. So all I could even go with is an element saying cumulative cash surplus, right? I am also talking about cumulative cash surplus, again going with, if this is equal to the operations period, I am simply talking about it as the summation of the entire cash from here till the last. That is the cumulative, which will fetch me the interest also. This is the cash that I am having it as a cumulative over this period, otherwise I am leaving it as a blank. So this becomes even more easier kind of stuff for me. So when I am dragging it till the last, I will get that this is the cumulative cash surplus for each of the years, fair enough. Now what I am saying is, I will go back. So this is what is my final cash flow statement, and few more derivations from the cash flow statement. But here I would like to update a few things back to, I would like to update a few things. So finally I will even take here outstanding OD. Finally, outstanding OD is also I would like to take, because this is how the ODs are existing in this years. I have taken the OD, and in this year I have repaid the OD. So I would consider right from the summations of each of these things. So in the outstanding OD, what I would be considering is, if this is, because the interest is applicable not on that year's OD but on the outstanding OD. So what I would do is, if that is equal to O, I would sum up, I would do the summations of the OD, I would do the summations of ODs until that period, I would do the summation of the OD until that period, and also one more summation of, I'll do a summation over summation. So I am doing a summation of OD over that period as well as the OD repayments also over that period. So I'm doing the summations of all those things, and let's see how it works out. If this is, so this is the summation that I'm trying to do, otherwise I'm replacing it with a blank. So the outstanding ODs for me at the end of, okay, this year 4.96, 7.04, this, and finally from the next year onwards, yes, the outstanding is 6.3, 3.5, or I could have done the cumulative OD minus whatever has been repaid. Whatever is the formula you put, this is something which is sufficient for us. So I'll very well handle that these are the outstanding ODs for each of the periods. Now, the numbers that will get in now, I'll go back to my P&L. The other income. In the other income, there are two components for us. One is the interest that we are going to get on the cumulative cash surplus, and also the interest that we are going to get on our DSRA account. So both these things will contribute to our other income. So what I would do here, I will simply put up saying, if this is equal to O, which is the operation space, I will find out, or I will do the summation of whatever the cumulative cash surplus we have in that period multiplied by the interest for the cash surplus. This is one element, and the second element I am trying to put up is whatever is the DSRA amount that I have multiplied by the DSRA interest. Right? These two things I am doing the summation, otherwise I will replace it with a blank. So which will give me that the interest income, the other income for each of the periods is getting worked out in that particular manner. Probably wherever, yeah, there is a hash value error coming up at all the places. So instead of using this multiplication sign, even that must be creating a problem. So let's try to address. So that's something we have to be slightly careful of when you are using. Instead of using the multiplication sign like this, I could have simply used a product sign, product formula. There is a small difference between the usage of these two things. So instead of using a plus sign, it's better to use sum formula. Similarly, instead of using a multiplication sign, it's better to use the product formula. It's sometimes better going ahead using the product formula rather than using the multiplication sign, because sometimes this kind of issues will crop up. So let's see now, even still the same problem is existing. So what cash flows, so here if I just want to check out if that is equal to O, cash flow AB 19 into assumption B 29, cash flow AB 19. Oh, here itself we have the error. So let's find out what is going on here. If this is O P&L Q19, yeah, it is actually coming from the P&L statement itself. Okay, let me revert back on the formula. Okay, let's try out this formula. saying if this is equal to O, let me just do it step by step. If this is equal to O, I am considering the summation of the DSRA requirement amount multiplied by the interest on the DSRA. This is one thing, and at the same time I am considering the cumulative cash surplus multiplied by the cash surplus amount. So when I am taking this, let's see what happens. So here the other income is coming out to be blank, but after that this is turning out to be hash value itself. If this is equal to O, we are taking the cash flow B17 this is equal to O, we are doing the summation of cash flow B17 times assumption B30. Okay, and also cash flow B19 cumulative cash surplus times assumption B29. So all are working out, all are correct. So if B2 equal to O, do that. Okay, but when I am dragging it, what is the reason this is coming out? If T2 equal to O, cash flow D17, what is the cash flow D17? This is the cash flow D17, right? Now no other error is coming. Cash flow D17, whatever is that number, times assumption B30. Let me just work out on okay, cash flow B19 times assumption B29 is what is creating the problem. Alright, cash flow B19 we should not have the dollars. Very good. Okay, cash flow B19 we should not have the dollars. So which means I will come here, I will not consider the dollars here. Let me now work it out. Let's see now. Let me drag it. Yeah, the same problem. Okay, cash flow B19, C19, D19, cash flow C19. Why is that still coming out as a problem? Something is going wrong here. Let me just check it out. Yeah, and I mean initially it was an initial formula issue. Yeah, but when I drag it across, I am seeing that the calculation is getting updated accordingly. So these are my other incomes. Right, in some cases the other income is generated so high because we had a huge cash flows, probably the cumulative cash that got generated in each of the periods, it has gone to a very high amount. So probably that is what is, if getting deposited, it is fetching us a very good other income, which is a significant thing. The same way I can think of the interest on overdraft, which could also go with the same logic. If this is operations, all I can do is I can simply multiply right? I can simply, if at all the overdraft is existing, right, what I'll see is, if the overdraft is existing, I can take the outstanding overdraft and multiply it with the interest on the overdraft. So this is what I'm computing, otherwise I will leave it as blank. So the interest on overdraft is also getting computed, which is increasing my expenses for the period, and after a certain point there are no expenses because the overdraft got completely paid off. So the overdraft was existing only up to the 8th year onwards, so which was resulting in the payments, and because of this looping we are seeing even the profit before tax became negative, profit after tax became negative. So this is what is contributing to our final cash positions as well as the final P&L for each of these years. So though it's a slightly complicated aspect, we have to get slightly comfortable with the usage of the preparation of cash flow statement based on the P&L as well as the balance sheet. I hope you got that comfort level in terms of understanding all these aspects, right? Though we have worked out a little bit more on the various formulas, we have used slightly complicated formulas. The more you practice, you can get a kind of hold on this. If you have any more further queries regarding the same, you can get back to me by giving me a call on this number, or you can even send in an email at vamsidhar@pacegurus.com. Thanks a lot for listening to this session. Thank you very much.